A war in the Middle East just cut your rent, your groceries, and your retirement fund. It happened through a 21-mile strip of water. It's called the Strait of Hormuz. 1/5 of the world's oil and gas passes through it every single day. For a moment, it looked like the danger had passed. A ceasefire was signed on June 17th, 2026. Oil prices dropped. Investors relaxed. Then the ceasefire broke. The US reimposed its naval blockade on Iranian ports. Iran struck back within hours. Brent crude, the global oil benchmark, surged past $83 a barrel. It was one of its biggest single-day jumps in years. By the end of this video, you'll understand why this matters far beyond the price of gas. You'll see why the stock market is trapped in an illusion, and why the safety net we relied on for years just vanished. Through the Strait of Hormuz flows about 1/5 of global oil and LNG. It is the world's most important energy artery. If it constricts, the world feels it. Normally, governments have a shield for moments like this. It's called the Strategic Petroleum Reserve. Countries can release emergency oil to cool prices fast. But that shield has been drained for months. US crude inventories are now at their lowest level since 1984. There is almost no buffer left. Oil isn't just fuel. It's a cost embedded in almost everything we make, grow, or ship. Every microchip needs oil to produce. Every truck, every ship, every factory runs on it. When oil prices spike, it acts like a tax on the entire economy at once. That tax shows up first as inflation. Inflation had cooled earlier this summer. This shock reversed that progress. Federal Reserve Chairman Kevin Warsh has one job right now: get inflation back to 2%. With oil prices rising, the Fed can't cut interest rates. Cutting now would only add fuel to inflation. Traders are now pricing in real odds of a rate hike instead. That would make borrowing even more expensive. Here's where it gets serious for your own finances. Investors expect rates to stay high for longer, so they're selling government bonds. When bond prices fall, yields rise sharply. The US 10-year Treasury yield has now pushed past the 5% mark. That's a level that ripples through everything. Mortgages get more expensive. Credit cards get more expensive. Business loans get more expensive. So why hasn't the stock market crashed? Because two forces are fighting each other right now. On one side, an AI investment boom has pushed the S&P 500 up over 15% this quarter. On the other side, the energy shock is dragging the rest of the economy down. Airlines are adding fuel surcharges. Shipping companies are rerouting around Africa at extra cost. Right now, AI is strong enough to carry the market, but that won't last forever. If oil and yields keep climbing together, stock valuations will have to come back down to earth. This war is working directly against the government's own promises on affordability. Every blockade meant to pressure. Iran also pushes gas prices higher at home. That's a real problem heading into the 2026 midterm elections. The administration wants to project strength abroad, but every move to do that squeezes American wallets. Markets have stayed calmer than you'd expect so far, but the reserves are gone and the clock is running. The longer this drags on, the closer we move towards something economists haven't seen since the 1970s. Back then it was called stagflation. Prices kept rising while growth ground to a halt. Strategists tracking this crisis are watching three things closely. First, whether companies tied to energy production hold up better than the broader market, since their revenue tends to move with oil prices. Second, whether short-term government bonds start looking more attractive now that yields are near 5%, since that's a return investors haven't seen in years. Third, whether AI-driven efficiency, not AI hype, becomes what separates resilient companies from struggling ones during an inflationary stretch. Wealth doesn't disappear during a crisis like this one. It just moves from one place to another. The dominoes from this energy war are already falling. In the next video, we're going to break down exactly how the 1970s stagflation crisis played out and what actually ended it. If you want to see how history's last version of this story resolved, that one's coming next. Thank you so much for watching all the way to the end. If this video helped you make sense of what's really going on behind the headlines, hit subscribe so you don't miss the next one. And if you learned something today, send it to someone who needs to see it too.